Hello, I'm Rhonda Porter. Thank you for joining me for the first edition of the Mortgage Porter for 2026. Let's start our first episode of 2026 with a review of what causes mortgage rates to go up or down. Mortgage interest rates are based on mortgage-backed securities or bonds, and they are traded kind of like stocks. Bonds tend to not have the same level of return as stocks, so investors tend to um, choose bonds over stocks when they're seeking a safer place to keep funds. And so countries also invest in US mortgage-backed securities as well. So countries like Japan, the United Kingdom, China, Belgium, and Canada hold the most of US Treasury securities. And the demand in our bonds or mortgage-backed securities help to keep mortgage rates lower. And so should countries move their funds elsewhere, that can cause mortgage rates to potentially move higher. China and Canada have been reducing their holdings in our mortgage-backed securities. And of course, the US holds a significant amount in mortgage-backed securities as well. So other things that impact mortgage interest rates would be signs of inflation, which that drives rates higher, or when we see inflation cooling, that helps mortgage rates. And also, it's also important to know that mortgage rates, because they are something that are market driven, do change throughout the day. Things that are going on around the world also impact the direction of mortgage rates, and it's going to be very interesting to see how markets, including mortgage-backed securities, react to the events that are currently taking place. Optimal Blue reports the average rate for a 30-year fix as of last Friday, January 2nd, averaged 6.144%, and so it was pretty much unchanged from what I shared with you on our last update. And please do remember that Optimal Blue Index is an average from about 35% of mortgage transactions or lenders who use Optimal Blue when they go in to lock in a rate. And so mortgage rates are also based off of, when it comes to pricing out a mortgage rate, credit scores, and if somebody's paying points or no points, or how much equity is in a property. And there are many factors that go into it. So if you would like to have a rate quote that is current based on your personal financial scenario, please reach out to me. I'm happy to provide that for you. On our economic calendar this week, we have job data with the ADP employment report and JOLTS on Wednesday, jobless claims on Thursday, and on Friday, the jobs report is scheduled to be released. It's around 9:45 as I prepare this for you, and mortgage-backed securities are up about 15 basis points. The Dow is up around 750 points at 49,148. Energy stocks are reacting with the U.S. capture of Maduro over the weekend, and there is optimism that the markets that the Fed will be forced to make more rate cuts with the new Fed chair in May. Just a reminder, our next homebuyer workshop will be on Wednesday, January 21st from noon to 1. We're going to be reviewing different mortgage programs available for homebuyers with a focus on first-time homebuyers, but really it's for anybody who's considering getting a mortgage, as well as strategies to help create affordability. So you do need to register at my blog at mortgageporter.com. You'll see a link at the top of the page to classes and workshops that I have currently going on. And this is in a webinar format, so you won't be on camera. You can enjoy your lunch and watch the workshop. As we begin to wrap up the live first-time homebuyer workshop series, I'm releasing the recordings from our previous workshops, so you can watch them at your own time and have access to all the materials. Just visit my blog at mortgageporter.com or reach out to me for more information. Thank you for watching, liking, and sharing this video. I truly appreciate your support. And if you or anyone you know are thinking about buying, refinancing, or even a reverse mortgage, let's talk. I'm happy to help you or anyone you know. Have a great week.